Then there's the other side, where people think technical analysis is basically astrology for traders.
Sounds like a lot of...
Thinking it's just a bunch of random lines on a chart, almost like a 4-year-old drawing on a wall with a marker. But who's really right here? If you went on Reddit and asked if technical analysis worked, you would instantly start an absolute brawl to the death of internet nerds fighting over why they believe they are right. But I don't want to just listen to a random 19-year-old on Reddit. Sorry, TrueD Gen 720. I want to listen to someone who has been in the market for decades. I want to listen to someone who deals with the transactions of billions of dollars in a 24-hour period. I want to listen to a hedge fund manager. So that's exactly what I did. I scavenged the internet for interviews with hedge fund managers, some dating back to 10 to 15 years. And oh boy, did I find some gems. I cut up to what I thought were the most interesting points in the interviews, so we could really answer the age-old question. What do hedge funds think about technical analysis? Let's get straight into it, shall we? Our first contestant is Corvin Kadurla. I think that's how you pronounce it. He's an ex-hedge fund manager and systematic trader for JP Morgan. We'll go over what he thinks about technical analysis and then see some other hedge fund managers' responses, including what a managing director thinks about stop hunting and what the retail investor should do to better their chances of surviving the stop hunting, an algorithmic trader that has worked with a bunch of hedge funds and his thoughts on support and resistances, and at the very end of the video, we'll go over what this guy, a man that has managed billions of dollars just himself, thinks about stop losses. So going back to Corbett, when asked what he thinks about technical analysis, this was his response.
Some of them love it and some of them hate it, and I think you have to really specify what you mean by technical analysis. If technical analysis means optically looking at the chart and looking at heads and shoulders and stuff like that, it becomes very difficult to test. You see, you might look at this today and see it's a heads and shoulders, and in 5 years' time you might see something completely different, maybe a cup with handle. What influenced you to make those choices, you can't determine, you can't test. So as long as the thing isn't, you can't write it down as a set of rules that, even a guy that doesn't speak English and sits in Mongolia can replicate, then it's not useful. There's obviously another set of people that say, well, it's more of an art than a science. And hey, if they make money, who am I to deny another poker's place in the sun, yeah? So ultimately, that's the really great thing about trading. Regardless of how you manage to get that black number at the end of the year, that's ultimately all that matters.
So after hearing Corvin's response, I completely agree with him. I like to think my channel has the complete staple of always backtesting strategies to make sure they work in the long term. In order to backtest said strategies, there has to be a specific set of rules that you have to follow. It can't just be, oh, when you get a certain feeling that the chart is losing momentum. No,